All right, so this is the first of what will be a series of weekly Tortoise podcasts. I'm going to do Friday nights. That turns out to be a good time for me to assess the week that was, and prior to me doing the reports for the weekend. So that's a nice way to get the closure to the week, and then kind of lock in the lessons learned from the chat room. So basically what I'm going to do is on these Fridays, my plan is to go looking at the primary intraday masterminds and then just take a look at all the charts we post in here. These turn out to be the same ones that we clump into the Patreon distribution, but this is the easiest way for me to get them. So I'm going to open those up and take a quick look at them. Those are the same posts that you would see on the Patreon distribution. And what feels kind of proper on these is to post one daily quiz that has a collection of all the little intraday things that we're doing. So you have just one message to open up, and that'll be just like a running daily message on Patreon, and then have the periodic just the distribution of the reports. This is one that just to get us started. This one here on the moon, tides, gravity, riverbeds, and hydrology. This is just one that really stuck with me, and there's something important about this. Thinking of the moon and its I'm just going to read it. Think of the moon and its gravitational forces moving the tides reliably from high tide to low tide and back again. That's the natural rhythm of ebbs and flows that govern the larger trends that give us, inside of that, the tactical opportunities in the smaller sets of waves. But we've got to recognize those higher time frames and market conditions and sector conditions as being the equivalent of the tidal forces being driven by the mysterious moon, which we might think of as the black box that is the sum of all actors and their intentions and all their time frames, and gets integrated into some kind of mysterious creative force that is the market. I don't think that's understandable in a predictive kind of way. I think it's a giant potential machine with probabilities, but has essentially some chaotic elements of it that make it very vulnerable to starting conditions and impossible to predict in a practical way. I think we can lay out tendencies and probabilities, but that's what I want to. The image that's in my mind of the moon and gravity and tidal forces. So then we can think of the regression line crossover system and the Bollinger Band framework, and then the MACD histogram and the four seasons. That's a background framework for marking off the normalish conditions that are formed by those natural gravitational forces. So we can see, is it expanding, is it contracting, high tide coming in, tide going out? At what point does that become abnormal instead of normal? When does it revert back to normal channels? So there's a very strong element of hydrology in all this. Then we can look at the dragon, the moving regression line 10, and the PSAR to give us some real tactical precision and refinement on the engineered positions that we're taking that get updated, in tactical time frame. If that's intraday, maybe it's minute charts, 3 minutes, 5 minutes, up to 30 minutes. If it's swing trading, your tactical time may be 30 minutes, hour, 2 hours, or even daily. If you're a position trader, that tactical time, when you're making those fine-tuned, it's maybe that's daily charts. So what we mean by tactical time really only makes sense within the reference of your longer-term primary time frame. So if you're a position trader and you're doing some form of the, blended monthly rebalancing with timing and maybe a little bit of engineering, so a modified BMR, well then tactical time for you is end of day. That's where you're making really refined moves, or maybe even end of week. But if you're an intraday trader or you're doing core and turbo, then your tactical time is really the speed of decision making, the execution decisions. That's tactical time. Your planning time and your campaign time is longer, where you're taking into account these tidal forces. So if the Dragon RL10 and the PSAR are giving us tactical precision and refinement, then the longer term regression lines, the 90 and the 270 and the VWAP to a certain extent, these are giving us insights into tactical refinements, but on higher time frames reflected on our charts. So when we look at the 90-270 and we see that crossing over on our time frame, we can tell already that there is some kind of tactical refinement happening on the next higher time frames. So we can get some insights there without having to shift our orientation on our chart. We can maintain our primary dashboard, but then be reminded visually of some of those larger tidal forces that are moving things around. And we're going to see some of that reflected in the flashcards as we go. So while there's going to be a lot of tactical refinement always on our mind, I want you to really see this week the background of the dashboard, the things that are going on at some of those other time frames that are reflected on our chart, on our dashboard, so that we can get a sense of the life cycle of those trades. Okay? So the way the Patreon is working out, I'm pretty happy with it. It's the place where I'm pushing for distribution through emails. All of the things that I'm also posting inside the chat room for the guys who are in there. The chat room is a nice place for you to post your work, to get feedback on your work, and I intend to use this weekly podcast as a way to do a better job in systematically addressing all of the work that you post in there. That's the common area around the campfire where you have come back from your excursion in the world of applying these techniques and coming in and telling your story in the visual display of information on your uploaded case study. And there are two kinds of postings that you can make. One of them is the setup, where you've gone through plan and prepare, and you've laid out your decision support framework for how you intend to trade that particular opportunity. The second thing you can post is the follow-up, and that's the execute and assess. So after you had your plan and you put it into the world, and then price happened, well, now we can take a look at the results. What kind of decisions did you make? How did it unfold? And then what can you learn from that that will improve the next round of plan, prepare, execute, and assess? So those are the two essential types of case studies to post in there. And then I would say, once a month, put your summary of your histogram and your one-page roll-up of the lessons learned and where you are in your own assessment, and then your interpretation of self-coaching. What is it that you're drawing from that analysis, so that we can comment on your assessments and your self-assessment, and that will help you sharpen your tool for being a self-directed coach. And that's where genuine independence comes from. In the martial arts, when you get to black belt, you now know enough about the art and about learning and about yourself to supervise your own training, and then periodically check in with the higher degrees of black belts. But it is expected that you take responsibility for your training and development, because that's how you get deeper into the art. So it's good to post your charts and ask for questions, comments, insights, but it's better if you post the conclusions that you've drawn from your reflective learning, and then the feedback that we give you will be even more meaningful, because it will be helping you improve on the assessment. So plan, prepare, execute, assess. I just had this speech with my officers in our roll-up of the year so far. I said that of all of those things, plan, prepare, and execute, execution has to be battle drill. Not thinking in the moment, but simply executing according to a well-defined, well-rehearsed, overtrained skill that senses and responds in a healthy, positive way. That's battle drill. You want to minimize the cognitive cost of making decisions in the moment. You want to trust your indicators, trust your decision making, trust the law of large numbers, trade at a level of risk that allows you to let the system unfold in a proper way so that you can study the standard results and then make decisions based on data. If you're trading at such a large size that you are always tweaking the rules, then you don't have a system, you have yourself, and you're just knee-jerk reacting. So we've got to have risk management to allow us to gather the data. And that's the individual trading case of plan, prepare, and execute. Assessment then comes in to say, how well did I assess, meta assessment, and then how well did I plan, and then prepare, and then execute so that I can get better for the next cycle. So each completed trade is not only a way to get paid, but it's also an opportunity to study to get better at all future trades. That's the feed forward portion of your implementation plan and your coaching plan. It's not just studying what has happened, but it's a way to study the past in a way that allows you to improve practice going forward. So assessment is evidence-based, rules-based, seeks to generate meaning, to understand what just happened, and then the so what application of insights for the future. That's the feed forward. So it's both feedback and feed forward. So get in the habit of doing that and not just asking for insights. You're going to get insights, but it's better for you to try to generate those insights and then compare that to the other insights that come in. So when I'm teaching at the grad school level with my guys now, they're getting ready to graduate in 4 months and they're going to go command soldiers. So now when I give them a question to think about, I ask them to answer it, and then I give them my answers so they can compare my answer to their answer and see what the differences are and what the similarities are in order to shape their self-assessment of what else they need to know. If they ask me a question, just wait for the answer, then they've stopped thinking. So what I need them to do is generate their own baseline as a check on learning, and then use that to compare to my answer, and then judge my answer and judge their answer and judge the relationship in between. That's what reflective analysis and assessment is really about. So that's sort of the purpose of this little weekly podcast, then, if I may say it that way. Just so real quick, we're getting ready to do our another 2-day swing boot camp here in Leavenworth, March 28, 29. Still a couple slots left. On this tortoisecapital.net website, these the curated playlist from subscribers, those are like, if you want to do that, put together some of your favorite videos and make it a YouTube playlist. That's a nice way for you to develop your own curated list of lessons that you want to get back to or reinforce or whatever. You can start building from the 1,500 videos that I have on there and then get your favorite album, if you will. You send me that list and other people can also walk their way through that. So I really think there's more to that than meets the eye. There's the ones of mine that Van likes, for instance. So you can find that at tortoisecapital.net. And just a reminder, some other goodies. I'm really liking this 37 strategies. I'm going to probably do another home study course for the gold and silver subscribers just on that, to go to the next level of discussion and implementation. That's really up to 41 now, and those are the ones that we use as the basis for boot camps and whatnot. So I'm really enjoying that. I would just point out also the research weekend dates for July are set now. And folks from Australia and Singapore are coming in already, and then there will be folks from the States as well. So that's going to be a good one again. Okay. So there we go. So now let me get back to these case studies from this week. And I would commend to you to read those judoquotes.pdf. Go download that. The similarity between what works in judo and works in trading, to me, is just phenomenally prescient and useful. Okay, so here we go. From earlier this week, so this is a swing trade daily chart, sweet and precious metals. That is my placeholder favorite for a defensive play that combines the best of all the precious metals into one very well-run company that acts like a leveraged gold fund, but has a lot of intraday liquidity and swings very nicely. And so this is one where we had finished a swing trade and an opportunity trade here. Tried along and had a quick exit. Then in this sideways quiet channel right here, this super pinch, we played the departure of the river with a swing trade. The next day had a gap up, and then it was a hybrid frog entry, and then a second hybrid frog entry, and that was a double scoop intraday turbo trade, and I kept 2 extra pieces of that, and that, so now I have 3 scoops of a swing trade in wheat and precious metals, paid for with markets money. And so I've removed my seed capital risk, and that was how the swing trade can then get further developed. That becomes a really good target. And then you see the blue lines are places where I intended to add to that position, and those also happen. So that's a really good position that we've built up in a risk-managed way. This is that wheat and precious metals trade now on the intraday with the turbo. So that's where it closed, and that was the previous day's VWAP, and then it gapped up and took off, and then based on this, about a 25-cent minimum manageable risk box, it broke out above the intraday VWAP, so long with a stop here, and then just use the RL270 as sort of the standard. It pinches into this sideways quiet channel, remains above the VWAP. I love that, and then gives me a Z3 breakout. I want you to notice now that early we have the 270, which is the purple line, and the RL90, which is the green line, started off the day together, and then the 90 is continuing to go. So when this Z3 happens, notice that it is also a summer, fall, stabilized, doesn't go into winter, Z3 pinch, and then a Z3 pinch breakout, and now it went summer, fall, summer, crossing the Red River, and that makes this an easy second entry, and then it gets locked in here. Now, if you decide to take this exit here on an RLXD and a PSAR flip, I am not getting offended by that at all. I decided to keep it just because the 90 was still strong, the VWAP was holding, and now here's where the 270 crosses the VWAP. That's a very positive long-term indicator. And now the 90 is above the 270. It found support at the 270 and resumes. If you had gotten out here, then getting back in here is a no-brainer. Now you can get out both positions or just get out one. I don't care. That's yours to figure out your own personal preference. But if you get out here, then this is a must-add. Where I planned to add was here at the excursion beyond the highest Z3 excursion. That's where I was planning, and so we'll see later on in a chart here. This continued to grind forward, and then there was another breakout. But because these were turbo positions, and I already had a swing trade in here, I wouldn't be offended by cashing both and then keeping one extra swing trade. So I would have a double scoop of a swing trade paid for by the money that's made with much tighter stops on those turbo positions. This whole week has been one in which the market was rolling over after an extended upward move. If you listen to the weekend report summary and strategy session, that's what we're talking about. And then when you add the coronavirus, that makes wheat and precious metals a brilliant play on the defensive side. So that was an area of emphasis for me. This was now later in that day. By this time, it had 1, 2 attempts to break through that yellow, where I said I was going to add a position here. Now, later in the day, it hasn't done that. And now I'm noticing the declining highs of each subsequent MACD histogram excursion, and it's back to approaching this. And now I'm more concerned about locking in the gains of these two positions, and it hasn't broken through, And now notice that the RL270 is starting to roll over in that blue circle. If I move this, you can see that. And now I'm more concerned about preserving this, the gains in hand. Like if it goes back to the VWAP, that's the least surprising move of all. So this was a decision. Hey, I gave you 90 minutes to break through. You didn't. Let me lock it in and remove the discussion. Now, if I get out and then it finds support and gives me some kind of owl reentry or something like that, or another Z3P breakout, I don't mind reentering here on a tactical frame. Because really, as long as it is above yesterday's VWAP, this is still going to be a positive day. But this just felt like the right time, that when the RL270 had rolled over, I want you to notice right in here that the RL90 was above the 270, and then the 90 crosses under the 270. That's a P1 on 2 time frames higher. So this is already starting to get stale, and it was just like you had 2 runs at it, didn't break through. Go ahead and cash it because we're right near the 0 line anyway. Let me just lock that in. So that's what that case study is about. Here's one with U.S. Steel, and now what I want you to see on that. Here was yesterday's VWAP projected all the way across. Here was the gap down, and notice the VWAP started low and then started to resume. So the move from the RL10 that morning at the peak all the way back to this two. Look, it comes back to yesterday's VWAP as a case. This is where the 270, which starts off near yesterday's close and is not as affected as much by the gap as the VWAP is, because that starts with the day's volume. So the 270 is decaying while price decays, and then here's where the 270 meets the VWAP and then decays. This is the point of maximum divergence to the downside. Think of that as a bow and arrow. The 270, that's how far it is away from the VWAP and yesterday's VWAP. So now the move is back to step 1 to step 2, and that's sort of what happened. I want you to notice down here the excursions of MACD histogram here, here to here, and now here's that where it's back to the 0 line and gets into a sideways quiet channel here, and then a possible breakout move. So notice in these 3 circles, what I'm highlighting is here's where the RL270 crosses under the VWAP, the point of maximum excursion away from the VWAP, and where it reverts back. And now this is actually a positive sign on the higher time frames. And now notice these Z3 pinches are breaking out to the upside and not to the downside. And the 4 seasons of MACD are now tilted to the upside with higher lows. That's the one that tells you that the trend has really shifted. This was the tipping point between the pain and the gain. So that's what we're seeing in U.S. Steel. That's a great target for intraday trading and as a great swing trade. Wynn Resorts, the same thing. Here's the breakdown below the VWAP on the 270. This is the point of maximum excursion. And notice that this was preceded by this sideways quiet channel and MACD histogram. And it failed to fail further and broke out 1 leg to the upside, 2 legs, 3 legs, pause, 4th leg, and now it's going to the Z3 maximum excursion, the same maximum excursion. So any break above that has to be seen as a really positive move. Now we're running out of time, so it didn't do that. But I want you to notice that that I pay attention to those previous Z3 excursions as a way to determine, did it now get to what would have been an extreme move, but now it's there? Notice how it gets there and hesitates, finds support, and then starts the reversion move. So the move from the bottom of the day, the belly of the dragon at its lowest level, back to the maximum favorable excursion, that's the net positive move to the upside in that green vertical. And now notice you have things like the 270 and the VWAPs and the extension of the previous day's VWAPs and the Z3 excursions to sort of set up this natural playing field. And then which side of fair value are you on? And then can we use the MACD histogram moments to determine the difference between the season of pain and the season of gain? And then we're ready for this kind of a breakout. You had a Z3 pinch breakout that resolved to the upside. It didn't fail further here. The 270's rolling up, and then it broke out again. So an entry at 132 gives you a play to 134. That's $2 on 130. That's 1.5% of intraday moves on a symbol that is a frog champion. Look how nicely that thing trends on a directional basis intraday. It also does the same thing on swing trading. That's why it's a frog champion. Here's one. This is a very nice entry. Possible re-entry or a second position. A nice second position, maximum favorable excursion, and then preserve the gains. I don't mind a 1-2-3 exit or inside the dragon after a P1, and that improves this by a little bit, but this is still pretty well. What I also like here is that we have evidence, I think this is Eric's work, where we have some onboard assessment. So now I can look through the assessment lens and I can comment on the lessons that he's learning. I like what he's done here in this trade frame. He says this is my minimum manageable risk box, and he's marked off those 3 potential gains to a reasonable move to the upside, and that's his 3-to-1. And now you can see this in terms of visual box trading. Very well done. Aussie dollar, beautiful owl. Look at this. Summer, fall, winter, spring. This is where the spring warning is. And now there's the owl. Once it's in the spring, that's where you find owls. Beautiful trade. I just want you to notice, hey, a Z3 break. Let's get those. And now the collapsing dragon here, and certainly here, gives you all of this. And then here's the next owl once you're back in the spring. I'm actually I favor this one on the longer side because you have a swing low and a higher low, and it's going to test the 0 line and go higher. So once it breaks above this level here, 66.34, that's the emerging dragon. You've already seen one surge. You find a double bottom, and now the next breakout to the upside. So if it breaks out here and you're long, then you have support, and a target. But let's get this. Those collapsing dragons, people, are nice. As nice as this is, let's start getting these unambiguous moves. Look at the collapses. Collapses are why you love the collapsing dragon. But then the run is done when winter becomes spring. And notice the turning point, and then a beautiful owl. Well done. 5-minute charts, Aussie dollar. This was an intraday in U.S. steel. It opened here. 2 horns of the dragon outside the Z3. Alert, it's in play. Sold off, found support. PSAR flip. Fall, hinted at winter, and then rejected and became the summer. So automatically interested by the breakout at the Z2 breakout. It immediately pushed to Z3 and beyond. So that's your entry. You have an 8-cent execution risk with the PSAR, and then just using the PSAR at some point track to the belly of the dragon. By this time this is in this move, your stop should be kind of the northern skin of the dragon, so you can lock that in. That's 1, 2, 3, 4, 5, 6 minutes of open risk, and you already have in hand what your minimum manageable risk box is. So you should never lose money on that trade. So no lose plus dinner for 2. Your stop should be in here somewhere. You pick the one you want. The southern skin of the dragon, the spine, the northern skin, the RL30, 1, 2. I don't even mind a 1, 2, 3 exit right there. Get paid. Later in the day, diamonds have been traded on the long side. Comes into a Z3 pinch, a long Z3 pinch, and then a collapse in the winter. Look how much you had, 3 or 4, and now a VWAP break. RL crosses the 270, crosses the VWAP, breaks down below the Z3, and the 90 is rolling over. That could not be a clearer signal to get short, and then the collapse, and then a second leg down, and then a 1, 2, 3 capture at the worst moment in the winter. You should be locking in a 2-scoop gain. That's 15 minutes and big wins from 294 to 292 and a half, $1.50 on 300. That's 0.5% move. That's $750 on the mini contract just from this position, and that's another three. So that's $1,000 on two single contracts in the Dow Mini. While that was happening, the big win was in SDOW, the triple leveraged inverse. That's the breakout at the same time the other one broke down. One didn't fail further, held support inside the dragon. PSAR never flinched. Don't you love this as an exit, as your worst exit? Second position on the RLXD break, or the breakout above the hump of the 10. Why not? You got two scoops in hand and deep in the money, and it's riding the Z2 line, and then a breakout and done. That's about 6R right there in 40 minutes. SPCE is Virgin Galactic Holdings. That is the inverse. Or not, I'm sorry. That is the poor man's Tesla. That's the next thing. That's the tech momentum darling. So Z3 pinch breakout, cash in the usual way, collapsing dragon, short, and then just ride the PSAR down. Second one, cash, short again, cash, easy. And then Virgin Galactic later in the day. So this was, So this was at 10:30. That's the 11:30 peak, or the the bottoming out portion. Here's 11:30. That's that same peak, and now the owl, cash, failed to fail further. Two higher lows, PSAR flip, but really an RLXD second position. Cash, get paid. C3 pinch, head fake. If you got short and then covered, that's fine. But now the next RLXD, testing in the spring, testing the summer, long, with a stop below the belly of the dragon or the PSAR, and second position, and cash. Lather, rinse, repeat. Here's the UDOW. I want you to notice 5 regions psychologically. And what I mean by it, you should be able to conceptualize what each of these colored boxes mean. Z3 pinch, that's the noise box, and then the breakdown below the VWAP extension in the morning, right? Here's the VWAP, breaks down, and then the big cat, and then 2 scoops down. 15 minutes, 6R, finds support, and then you get a double bottom with higher lows. This is the moment of indecision in the spring. This is, now, once you get past this peak excursion, Z3, bottoming tail, and then an owl entry, the target is back to the VWAP. I want you to notice the VWAP started here, and then in the middle of this collapsing leveraged run, the VWAP got as low as this. So the rebound is from here back to where the VWAP has decayed to. And then in section 4, that grinding upward move closed the gap from the peak excursion all the way back to the VWAP. So you actually were able to realize the opportunity that was implied in this trade frame. This is the thing that just happened. The breaking of the glass, the collapsing of the floor, 2 legs down, panic overreaction. 2 is the size of the pain inflicted on leveraged positions. This is guys that are bailing out of their leverage positions as fast as they can. Sell it as much as you can. Now, number 5 is the residual of the day after the quiet collapse, effort, grinding up, and now it's at the VWAP today versus yesterday's closing VWAP. This is the net residual of the day. How bad is today if it closed here? It would have lost from here to there. That's what's still available in the rest of the afternoon, but that's how bad it's going to feel. This is how bad it felt to somebody in the middle of it. This is how bad the residual feel is, and these are the little moments of opportunity that you have to learn how to read, from the 270 back to the VWAP, back to the next VWAP. So those are the lessons from the flashcards that I would like you to take away and learn from. Okay. That's everything I wanted to cover on the roll up. I'm getting ready to do a couple other webinars for my doctoral students. I'm going to be talking to them tonight about plan, prepare, execute, and assess, and the difference between strategy and tactics. So, there we are. Any questions before we call it? Hearing none. Hey, thanks for your kind attention. I'll get this processed and posted, and then off we go. Take good care, guys. Thanks for hanging in there.